Hi everyone. On this video, I'll be showing you the new Ambition 711 model 2024. Whereas the charts like this, we probably see open, high, close candles. So when other people are seeing this as noise, because it's a 1 minute time frame, so they probably think it's noise. They probably think there's a lot going on. There's no opportunities when the market is like this. I actually see this, which this is our model that we use for our mentorship. We train people how to find this setup and be able to follow very simple steps to be able to find this simple model and be able to make money out of it. It offers you plus minus five handles. So step one on this steps here. What you do, you mark the 1 a.m. candle using a vertical line, which is this one. You already marked that line. We explain more into detail when you in our mentorship, but for now, I'm just gonna go through the basics, the fundamental part of it. But the deep knowledge about it is you're gonna get it when you able to join our mentorship. So yeah, we mark the 7 a.m. candles. Wait for price to create relative equal highs and lows. So this year, after 1 a.m., 7 a.m., which is our GMT time, we have to wait for price to create relative lows and relative highs. So we have this low here and this low here. It makes it a relative low resistance, and we have this high here, and this one. It makes them relative equal highs. So once you figure out the relative, the buy side and the sell side, you go to step number three. You look for a fair value gap above or below the 1 or 7 a.m. consolidation, which is this consolidation here. So you look for a fair value gap below, which is this one, and the above one, which is this one. So I'm just gonna mark it out in time. This is the 1 minute fair value gap that's above the the consolidation. Yeah. So once the price is busy consolidating here, you wait for price to either go to this fair value gap or go to this one, because this is the one that's below the most logical one that's below the consolidation, and this is the most logical one that's above the consolidation. So whilst the price is still on this consolidation, you wait to either to get to this side. So wait for the session to open. So on step four, you use the 1 minute, 3 minutes, or 5 minutes favorable gap to find the most logic one that the price can be likely to run to. So step number five, wait for the session to open. We have this 7 on daily candle, we call it the true open candle. Again, there's more detail into it. If you can join the mentorship, we can be able to break it down for you and explain how important is the 130 candle. So this is the 130 candle that we open. We call it the London True Open. We mark it out in time. Then we wait for price, which is step number 7. Enter at the fair value gap. Price broke two, or wait for market structure shift and buy below the true open. So you wait for this price to break the lows here. You either enter here. This might be your first entry here on this fair value gap here. This might be your first entry. The more you learn about this, the more you see this thing happening, is the more you're gonna be able to know which is your perfect entry for you. So, or wait for market structure shift and buy below true open. So this, you have a market structure shift here. The price just broke this high after taking out this low, and we have the true open. Then you buy below this true open here. We use the fair value gap that's below the true open to find an entry, which there's more detail into it, but I'm just gonna say it on the easier way. Then step number 8, using the range that took out the first side liquidity, measure the second standard deviation. This is actually the range that took out the liquidity, meaning we have this low here, this low here, this high here, this high here, and this liquidity was taken out. This range from here to here to the where price was being taken out, you measure this with the Fibonacci, and you measure the second standard deviation. You measure from this low here up to this high here, this one here. Then this will be your second standard deviation, which is where your actual target is. At this point, we have a buy side liquidity here, which is on the left side here. We have this liquidity here, so we're gonna see that as a target. And now that the second standard deviation is close to this will be our actual target, the buy side liquidity. So I'm just gonna remove the Fibonacci here. The Fibonacci has its own settings, which we explain the settings on using on the mentorship. We're telling you which deviation you need to use, because we're only using TradingView to make the analysis. So being in the mentorship will help you very much on getting more into detail on what to target, what to do, what to look for at these specific times. So we're just gonna mark this. We're just gonna mark this as second standard deviation. So this is the actual target here. Then, oh, what just happened? Oh, okay. So we just figure out the second standard deviation. Okay, step number 9: to add more contracts, look for OTE. OTE is basically when the price took out the relative lows and it took out the relative highs, then it retraced back to the 50%. Let me just put this here. So this low is liquidity, this buy is the buy side liquidity, and this in the green, this green here, this shaded area here is the 50% equilibrium. So the price traded to the 50%, which it has the London true open and it has the fair value gap below this true open. So this is actually the second confirmation that the price is going to be bullish, and you're gonna get more entries when you enter to this at this point here. So this is an OTE. We call this an optimum trade entry. It's from ICT. It's an OTE. The man who's doing this is ICT himself. Oh, that's what I just did here. The author of these lessons is ICT. I've spent my last year studying this concept and all of this. So yeah, if you want to get more details about the OTE and all of that, you can just go to ICT videos. But on our mentorship, we also have a very simple way to show you how these things are done, because he normally does long runs, but we're able to squeeze a lot of things to compress them on being to be a good one straight up lesson. So from here to here, this is actually the 2024 7-Eleven ambition model. So this model can offer like 5 to 7 pips. So let's check here. From here to here, we have like 77 hurdles. That's more like 700 rand, $700, depending on the lot size that you use. But if you get more of this concept here of this model, you're guaranteed to see consistency, because it's a straightforward model. It's a time-based model. You don't have to get in and out anytime. You wait for specific time. There are specific rules that you need to go through, and they're very straight, and you're gonna see more discipline, and you're gonna see more changes in the trading once you get the best test of this model. I'm gonna be showing you more detail into it on how to look for it. I'm gonna make live videos going forward, but at this point I'm just gonna close it here. I'm gonna be able to yeah, to get more into details, because this is actually my first video of teaching. So I'm hoping I'm gonna grow more and be able to make this model as easy for you. But just join our mentorship. We have just if you're interested in joining mentorship, you can just leave the message. We have our link on my bio. We have our links there, so you can just click on those links, and we're gonna send you through our WhatsApp, and we're gonna be able to get you more detail into this. Otherwise, thank you so much for listening, and thank you that you made it this far. Peace.